Pablo, good to see you. How you doing, brother? How you been? Good evening, Miles of CMF. Have you anything special planned for this weekend? Do I have anything special planned for this weekend? Yeah, it's work. It's what I have planned for this weekend. I'm meeting my business partner, and we're just going to be working on the weekend, to be fairly honest. Working on CoinMove, to be fairly honest. Not much of a plan of going out or anything like that. Just working on CoinMove on the weekend. Good evening, Miles. But I love what I do. Good evening, Miles of CMF. JP, good to see you as well. How you doing? How you been? What's your plans for the weekend, Joe? Susie, good to see you as well. How you doing? How you been? Good evening, Miles. I couldn't get you on Max. I'm not too early. You're actually perfectly on time. Evening, Miles. Good to see you as well. Lee, how you doing? Adi, let's go. How you doing? And welcome to the CMF Live, everyone. So let's do intro, disclaimer, and what we're going to talk about on tonight's live. And then we go straight into the first news. But before that, let me just pin the live. Pin to profile. Pin. There we go. Lee, let's go. Good to see you. Hello, brother Miles. Coming to us. Good to see you as well. How you doing? How you been? So, welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, regulations, pretty much vital information for you to know about regarding the world completely transforming into a digital space. We also do Q&As on this live as well, which means if you have any questions, put it down in the comment section. More than happy to help you out. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And this is episode 372 of the CMF Live right now, which is very impressive, to be fairly honest. Now, on tonight's live, we're going to be discussing matters of the market space in general, where it's headed. We're going to be talking about tonight's live regarding ETFs. We're also going to go through some Trump news regarding the stock market, weighing into the crypto market space. We're going to talk about some IPOs inside the blockchain space as well. We're going to go through some BlackRock news, some tokenization news on tonight's live as well. We're also going to talk about Tether on tonight's live, which is a subject that we haven't spoken about for a fair while. Let's just be honest with ourselves. We're going to also talk about some essentially perspective news coming from CEOs and directors. We're going to talk about Van Eck, more ETF filings on tonight's live. And obviously, towards the end, we're going to be talking about the Ripple news. Now, first news on tonight's live is regarding essentially what's happening inside the market space. Are we in a good space or a bad space and so on? Before we go through that, let's go start the conversation one more time and then we'll go straight into the first news. And I also want to say thank you so much to everybody who has already liked and retweeted this live. If you're watching this on X right now, and if you're watching this on YouTube, thank you so much to everyone who's also liked the live as well. CMF members, if you haven't liked or retweeted this live and you're watching this on X, please like and retweet. And if you're watching this on YouTube, just drop a like. And if you want, as an extra bonus, drop a comment outside the live as well. Hashtag whatever you want. Good evening, Miles and CMF. Manny, good to see you as well. How you doing? How you been? Good evening, Miles. How you doing? Doing great. Callie, good to see you as well. I have some boring wallpapering to do for my parents. No problem, Joe. Let's go, Manny. Hi, Miles. Is this the start of a bull run? We're not that far off, Johnny, to be fairly honest. Now, first news on tonight's live is regarding essentially what's been happening inside the market space. So here it is. Ethereum, Bitcoin, ETFs in general, the surge expected for the Fed rate cuts. We're still on the subject of, Fed rate cuts are going to be happening because the majority think it's going to be happening. Minority think it's not going to be happening. So Bitcoin retested essentially $115,000 mark after a powerful rebound supported by significant ETF inflows right now. Today, Bitcoin spot ETFs recorded $552.7 million in net inflows, signaling a very strong, essentially, participation from institutional investors right now. This steady demand essentially highlights how ETFs are playing a crucial role in essentially reinforcing Bitcoin's market structure. Alongside essentially ETF inflows, the Coinbase Premium Index also turned positive, 0.02%, a sign that US spot demand for Bitcoin has returned. When the US buyers lead, it often reflects essentially renowned confidence in the crypto market space, especially from institutions and large investors. The combined $665.8 million in ETF inflows highlights a solid foundation for the crypto market space. Consistent ETF participation provides liquidity, stability, and confidence to both institutions and retail investors. With essentially a steady demand through ETFs, both Bitcoin and Ethereum remain supported, essentially making the current rally more stable and essentially in the short-term perspective for moving forward. Ethereum's price also could see a significant rise as Morgan Stanley revises its Fed rate cut forecast for September 2025. Even Morgan Stanley is coming out today and suggesting that we could be seeing that 25 basis point cut rate. Institutional investors are increasingly focused on that Federal Reserve potential 25 basis point rate cuts, which essentially might influences Ethereum's footsteps, Bitcoins, and the rest of the crypto space, to be fairly honest. Morgan Stanley, a key player in institutional research, has updated its outlooks on essentially the upcoming Federal Reserve interest rate cuts. This has heightened market interest as past rate cuts often lead to essentially increased investments in cryptocurrencies. Institutional investors, including Standard Chartered and others, have also been increasing essentially the allocations of Ethereum and other certain essentially crypto assets as well, and favorable to the macroeconomic conditions right now. Institutional investors are showing a growing interest towards ETH and cryptocurrencies, with significant allocations being noted from firms like Grayscale and ARK Invest. These institutions are attracted by Ethereum's and the cryptocurrency space's evolving financial attributions, including its post-essentially merge staking yields and the differential essentially supply characteristics. Kevin, the CEO of RAAC, also noted that the trend of increased Ethereum purchases for corporate treasuries, according to a report shared on Crypto Exchange's newsletter. Standard Chartered, essentially institutional arm, expressed its views that the treasury accumulation is a primary factor driving Ethereum's price target upwards to $7,500 is where they're predicting Ethereum is going to be settling at. The Federal Reserve's rate cut policy has historically impacted the cryptocurrency markets. Ethereum and Bitcoin have previously seen price surges following their interest rate cuts, as essentially the markets enter a risk-on phase. Historical data from 2019 and 2020 shows us the rallies have essentially back then 15 to 20%. Of course, a lot of things have changed from back then. Now we have essentially a multitude, you could say, of regulations all around the world. We also have the immense amount of institutions inside the crypto space, banks inside the crypto space, governments inside the crypto space, pension funds inside the crypto space, ETFs inside the crypto space, ETPs inside the crypto space. So there's a lot of things that have happened since then. So we should be seeing a much more bigger market rally, not just for the rate cuts happening, but for anything else that happens in favor of cryptocurrency moving forward, especially rules and regulations. With Ethereum's essentially NUPL, essentially net unrealized profit and loss position at 0.62, the cryptocurrencies essentially is close to a level that might trigger both taking and potential corrections. Both institutional and macroeconomic factors are crucial in shaping Ethereum's essentially current market outlook, especially with the anticipated Federal Reserve rate cut decisions. The Ethereum price could potentially experience a surge if it surpasses the $4,579 mark. This price point indicates a technical essentially crossroads to where increased momentum could lead to substantial upward momentum in value. Community sentiment on platforms like GitHub remains cautiously optimistic, suggesting long-term bullish expectations are on the way. On-chain data indicates that while short-term volatility could arise from high unrealized profits, Ethereum's structural characteristics for staking and institutional support presents a positive outlook for future price movements. The on-chain essentially context is notably supported by institutional treasury wallets, adding that solidified to Ethereum's position and the major cryptocurrency positions. Overall, the crypto market space stands at a well-positioned asset for potential growths driven by macroeconomic factors and institutional interest going forward. In general, just a few things to unpack on that. One, the majority is still standing on rate cuts are going to be happening. The minority is standing on rate cuts are not going to be happening. Today, we even had Morgan Stanley essentially coming up and saying we, expect a 25 basis points to be, a rate cut to be happening as well. So, on top of JP Morgan or BlackRock or any other firm that's came out so far suggesting rate cuts are happening, Morgan Stanley is another one for today. And the market is definitely preparing for rate cuts to be happening by the looks of it. We're having small bursts inside the crypto space, 1 to 2%, 1 to 2% until rate cuts happen. If they don't, the market will react in a negative way. It will go down 24 hours minimum, 48 hours max, and then come back to normal again. It will rebound after 48 hours. It normally does. Now, moving off from that to Trump news. Trump claims the best stock market aimed volatility. Donald Trump, in his second term, has repeatedly essentially claimed that the US features the best stock market ever, as indices soared to record highs in mid-2025. These actions highlight the resilience essentially of financial markets aimed trade distributions, with indices reaching all-time highs despite early volatility due to aggressive tariff policies. Donald Trump has declared the US stock market as the best ever during his second presidential term. His bold, essentially, tariff strategies have significantly impacted the market behaviors, initially causing essentially a sharp decline in major indices and then afterwards a massive rebound. Under Trump's leadership, trade protectionism essentially took center stage, fostering volatility and transforming market dynamics. While essentially pushing tariffs to unprecedented levels, he emphasized the resilience of US equities as they reached new highs. The market's initial response was a nearly essentially 20% drop in the S&P 500, reflecting uncertainty over tariffs. However, the tariff things has essentially been put behind us, and this was followed by a quick recovery, ultimately accumulating to the record-breaking highs by mid-2025. As essentially trade tensions eased. Despite broader financial instability, Trump's policies underscores a complex balance between political agendas and market confidence. His assertive essentially actions have led to mixed reactions, particularly affecting investors, strategies, and market sentiments. While essentially the equities market surged, cryptocurrencies showed essentially some direct essential response, to be fairly honest, to Trump's market claims. Analysts continue monitoring potential links between equity markets and digital assets in financial uncertainty and policy changes. Looking forward, Trump's assertive, essentially economic strategies could influence regulatory landscapes with potential technological and physical essentially shifts. Alignments with historical trends suggest continued volatility, necessitating essentially careful attention to global market infrastructures. And Donald Trump, President of the United States, said, "I didn't want it to be April Fool's Day because then nobody would believe what I said," essentially back then. But yes, essentially, regarding Donald Trump saying best stock market ever, he has helped boost the stock market tremendously, this year without a doubt. Stock market weighs into the crypto market space. Bitcoin tends to follow the tech stocks sometimes. And when it does, obviously, the rest of crypto space follows Bitcoin's footsteps because we don't have regulations. We get regulations, we get utility, we decouple from Bitcoin. Life would be so much better in that sense. But in general, yes, Trump has helped the crypto market space a lot. A lot of people would say Trump hasn't helped the crypto market space, or the crypto market space, or the United States. Those people are deluded. Now, Gemini is what we talk about next because their IPO happened today. But before we talk about that, let's go inside the comment section first. As I said previously, this is live, which means if you do have any essentially comments, put it down to the comment section. I'm more than happy to help you out. So let's see where we're at inside the comment section, and we go straight into that next news. And as I said previously, I read everybody's comments one by one, so I'm going to get to your comment eventually. Let's see where we're at. Morning Miles. No, we were here actually. What's the Ripple news? Towards the end of the live, I'll tell you. Does it mean Ripple XRP can reach $10 soon? It's on the books. Morning, Miles, is CMF. Shelly, good to see you as well. How you doing? Morning, how you been? Good evening, brother Miles. Good to see you as well, Frankie, brother. How you doing? Good evening, CMF. Let's go. Good evening, Miles, and CMF. How you doing today? I'm doing great, Carlos. Good to see you as well. How you doing? Batman says XRP news ? Yes, we do have XRP news. We're going to get to it. There's a lot of things that's been happening, which we're going to discuss, and we're going to get to that XRP news as well. And there's one XRP news in between the live, and there's one towards the end. Happy Friday. What up, Miles and CMF? Hope all is well. Let's go. Let's go. Ray. And hi, Miles and CMF. Golden Dragon, good to see you as well. How you doing? How you been? Now, Gemini IPO actually went, incredibly well, to be fairly honest. And they are backed by essentially Ripple. I mean, we all saw the filing paperwork that came out regarding Gemini essentially getting a loan from Ripple in RLUSD and essentially doing some of their acquisition in RLUSD as well. Gemini, the cryptocurrency exchange and co-founded essentially by Tyler and Cameron, today made a powerful debut on the Nasdaq Global Select Market under the ticker GEMI. Why is this important for anybody inside the crypto space? Well, it shows that the institutional sector essentially is showing still interest or appetite for the crypto space. Not only is essentially Wall Street, very heavily invested into the idea of ETFs happening with 95 ETF filings, but they're also, it seems like, very heavily invested into the idea of IPOs happening. So they want to be involved in general, if it's through ETFs, ETPs, or IPOs inside the blockchain space, which, it's incredible for us because it shows that, not only they're bringing their money to the table, but they also add credibility to the table as well. The company priced essentially its IPO at $28 per share, raising essentially $425 million and bringing its valuation to $3.3 billion. This strong debut highlights growing investor essentially confidence and signals an increasing interest in digital assets. That's why it's important. Gemini's IPO was met with a remarkable response, with 15.2 million shares offered, oversubscribed by more than 20 times. This demand showcases heightened institutional interest in crypto exchanges, further demonstrating that the broader acceptance of digital assets. This is a very incredible amount, essentially a piece of news, to be fairly honest. I mean, just the ETFs going live is just going to show that there is appetite right now for those ETFs. When they do go live, a lot of investors going to be pouring in from Wall Street. Companies in public markets. Now, similar trends have been observed in other recent IPOs as well, like Bullish and Figure Technology, indicating essentially a very growing openness to crypto firms within traditional financial markets. In a rare move, Nasdaq invested $50 million in Gemini during its IPO, reinforcing confidence in the exchange's future. Additionally, the companies announced a partnership to collaborate on services such as custody, staking, and collateral management through Nasdaq essentially Calypso essentially platform. This alliance strengthens Gemini's position by aligning it with established financial institutions and infrastructures, bringing the gap between traditional finance and evolving crypto sector. Before its debut, Gemini adjusted its IPO target range from $17 to $19 to $24 to $26 per share, reflecting strong investor essentially enthusiasm. The company aimed to sell 16.67 million shares at the upper end of the revised range, potentially raising up to $433.3 million. If underwriters essentially exercise their options to increase the offering, the number of shares could rise to 17.12 million. After the IPO, Gemini's market valuation is essentially expected to be around $3.09 billion, with 118.8 million shares outstanding, to be fairly honest. Gemini's successful listing is a part of the growing trend of crypto-related IPOs in 2025. Other firms like Figure Technology and Bullish and Circle have also gone public, signaling a shift in institutional interest towards digital assets. As crypto ETFs attract more investments and regulatory clarity improves, the appetite for equity exposure to digital assets continues to increase. Despite the IPO's success, Gemini faces legal challenges, particularly a lawsuit with the SEC over its former essentially earned program, which the SEC is most likely going to be dropping. Analysts caution that the ongoing litigations could impact Gemini's stock price in the short term. However, the overwhelming demand for its shares and its investment from the Nasdaq demonstrates continued investor confidence in the exchange's long-term essentially prospects. Gemini's listing on Nasdaq marks a significant achievement for the exchange and the wider digital asset sector. As a newly public company, it sets a new benchmark for other crypto exchanges to follow in suit, especially in areas such as exchange volume, staking, and essentially custody services. The strong reception underscores the growing mainstream adoption of crypto companies in traditional financial markets. Honestly, this particular news tells you that Wall Street is, essentially they want to be invested inside the blockchain space. If it's through IPOs, ETPs, or ETFs. The 95, essentially roughly about 95 ETF filings that's essentially on the SEC desk right now, it shows that Wall Street is heavily wants to be invested essentially into expanding more inside the crypto space. With the IPO of Gemini going live today and smashing records for an IPO, essentially for the blockchain space, it shows that there is massive appetite right now in Wall Street for blockchain. Now, BlackRock. BlackRock is exploring tokenization for ETF share expansions right now. So BlackRock is exploring the tokenization of its ETF shares, expanding on successful tokenized initiatives in its digital asset sector, with leadership from CEO Larry Fink. This move could transform asset management subject to regulatory approval and potential increasing on-chain asset allocations and impacting cryptocurrencies. If BlackRock is about to go, sorry about that, everyone. If BlackRock is about to go full IPO, essentially a full tokenization mode, it's going to send a signal, like a ripple effect, to the rest of the world in terms of institutions that BlackRock is about to go full tokenization, essentially. Other companies essentially 99.9% guaranteed to follow in suit. If BlackRock does it, Franklin Templeton will do it, essentially Van Eyck will do it, Goldman Sachs will do it, Charles Schwab's will do it, and it will just cause a ripple effect of more and more companies on the higher end joining the crypto space and going through tokenization. And that will provide liquidity towards the crypto space. It will provide direct, essentially, liquidity for certain crypto assets that are chosen. It will provide indirect value for the rest of the crypto space, those are legitimate assets, and because it adds credibility towards the crypto space and essentially showing as a safe environment, transparent environment, an innovative environment, and so on. So, BlackRock is considering the tokenization of its ETF shares, building upon its prior success with Build Tokenization Money Market Fund. This initiative is a part of a broader effort to enhance its digital assets framework. The initiative is led by CEO essentially Larry Fink, who is known for advocating digital transformations of BlackRock's finance, and essentially crypto market experts are steering this project to improve securities frameworks. This is what was said. The next generation for markets, the next generation for securities will be tokenization of securities, said Larry Fink, the CEO of BlackRock. The exploration essentially of tokenized ETFs could impact the financial markets and raise essentially raise key blockchain essentially hosts. This shift potentially attracts institutional investments in digital assets. And this is what I mean. It's going to add direct and indirect value towards the crypto space. Direct for crypto projects that are chosen, indirect because it adds credibility towards the crypto space of the projects that are not chosen. From a business perspective, not all crypto projects, just to be fair honest as well, legitimate ones, essentially top 10, top 20 will get that credibility. From a business perspective, this could reshape asset management by increasing capital allocation, by essentially into tokenized assets with regulatory approvals remain a critical step for execution. Tokenization could initiate changes in blockchain finance, attracting new market players. Existing infrastructures essentially may need for adaptation to handle innovative financial products as outlined by BlackRock's expanding initiatives. Experts also predict that in integrating blockchain technologies into traditional finance might spur regulatory innovations. Moreover, potential capital allocation shifts could further essentially authenticate BlackRock's streak in interest in the digital asset space. If BlackRock honestly goes through a full essentially tokenization mode, then other institutions will most likely be following in suit in its footsteps. And as I said, it's going to add indirect and direct value depending on what chain is chosen, what chain is not chosen, but indirect value and direct value. For the indirect value, it would be top 10, top 20 crypto projects to add that credibility towards crypto space because BlackRock is entering into it, going full tokenization mode. Direct value will be added essentially towards the crypto project that's essentially chosen as those backbones and so on. And if the BlackRock, for example, does come out and say Ethereum because they are on, essentially their build is on Ethereum, doesn't mean they're going to stick on Ethereum forever. They will be expanding obviously to other chains as well. Now, let's go through the comment section first before we go through the essentially next news on tonight's slide. But the next news is regarding Fidelity, ETFs, XRP, Solana, and HBAR. Before we go through that news, let's go inside the comment section first. Let's see where we're at. We were at here. Hi, Miles, CMF, Golden Dragon, good to see you as well. How you doing? Good evening, Miles, CMF, Mike, good to see you as well, brother. How you doing? Hi, Miles. How are you today? I'm doing great, Michael. Good to see you. How you doing? How have you been? Now, Fidelity and Canary ETFs are now listed on the DTCC, which means they're one step closer to getting, it's like an indication of they're one step closer to some sort of approval from the SEC. As I said before, there's no way in hell that the SEC is going to be rejecting any of these ETFs unless they're completely absurd. But an XRP ETF will never get rejected by the SEC, in my point of view. The essentially Solana ETFs not going to get rejected. The HBAR ETFs, they won't get rejected. AVAX won't, essentially. I don't think any of them will, to be fairly honest. There's no, because the SEC right now is showing that positiveness towards the crypto space right now, and also essentially doing sit downs with the EU right now in terms of MiCA regulations, and essentially EU and the US working together inside the blockchain space. So they're all about positivity towards crypto space, bringing innovation towards crypto space. So I don't think in any way in hell they're going to be rejecting any of them. So the DTCC essentially, Fidelity and Canary ETFs listed on the DTCC is an indication that one step closer to actual approvals. Fidelity's Solana ETF and Canary HBAR and XRP ETFs have essentially been listed on the DTCC website today, marking a step towards potential market launch. These listings, while essentially pending SEC approval, have sparked market anticipation, with essentially Solana experiencing significant price increases, increased trading activity for XRP and HBAR. Fidelity and Canary have taken a bold step by listing essentially XRP, Solana, and HBAR ETFs on the DTCC system as of today. This move essentially signals a back-end readiness for potential market entries pending SEC approvals. Fidelity, one of the largest essentially global asset managers, and Canary Capital are essentially the key players. They signal major actions in cryptocurrency ETFs market space. However, the actual change remains contingent on regulatory approvals from the SEC. Nate Garcia, the president of essentially Nova Diaz Wealth Management, noted DTCC listing essentially Fidelity, Solana ETFs, and Canary XRP and HBAR ETFs doesn't mean anything from the regulatory standpoint. It's all on the SEC, but it is an indication that the next step has been taken. The listings essentially have already impacted the market. Solana's price increased by over 6% within 24 hours because of that DTCC listing, showcasing the heightened anticipation among crypto, essentially among market participants. These actions underscore the market's speculative nature ahead of the SEC rulings. Financial implications are significant, as increased trading volumes reflect betting on potential ETF approvals. The institution's landscape could drastically shift if the SEC moves forward. Over 90 crypto ETFs essentially are waiting for regulatory decisions right now, indicating a transformative phase. Wu Blockchain reports essentially on new crypto developments, underscoring the market's readiness for such changes to be happening. Nearly every major cryptocurrency could see market inflows if approved. Market liquidity and institutional interest are poised for growth. I mean, we just saw with the Gemini IPO, and that was a Gemini IPO that blasted through the roof essentially when it essentially launched on the IPO today. It definitely shows that there is a massive appetite for essentially blockchain when it comes to traditional financial space. ETFs get approved with especially 90 plus ETF filings. There's a massive appetite. Nearly every major cryptocurrency could see that market inflow if approved. Market liquidity and institutional interests are poised for growth. On-chain data supports increased engagements, echoing past trends following pre-approval activities for Bitcoin Ethereum ETFs. Historical trends also suggest that ETF approvals can lead to massive inflows. Analysts estimate high probabilities for approvals of these ETFs by year end. If essentially realized, this development will diversify institutional assets and catalyze essentially further market expansions. Eric comments on ETFs essentially and market speculations, emphasizes the potential growth in ETF market spaces. So the next step has been taken. DTCC essentially listings of XRP, Solana, and HBAR ETFs from essentially Templin and essentially Canary. It shows that the next step is definitely been taken. So if you want to know, are we getting close to those ETFs happening? By the looks of it, yes, we are getting very close to those ETFs happening. Also, some of their deadlines are running out. And as long as the SEC doesn't reject them, which I don't think they will to any of them, they're going to pass through once their deadlines run out. Now, Tether is what we're going to talk about on tonight's slide next. So we've discussed Tether a few times on this slide, in the past, about what could potentially happen to Tether going forward. And I said that I don't think Tether is going to survive the further we go into a regulated world. Essentially, USDT is not going to survive the further the world gets regulated regarding cryptocurrencies. And USDT essentially a while back ago was kicked out of the EU due to not being full transparent and not holding certain assets in European banks, just in case their DPEG situation or whatever may happen to Tether. And then I said that I don't think USDT under regulations is going to survive in the US market space because they're not based in the US, first of all. Trump is very big on the idea that, he supports American blockchain projects. Second of all, Tether is the #1 essentially digital dollars used. That's not American. Essentially, it is based in El Salvador. And not only that, Tether struggles with transparency. They've been sued before because of transparency issues by New York courts, which they paid a fine of $14 million. And these are all factual information. This is not to throw accusations towards Tether in any sort of a way. These are things that people go and research by themselves. Now, it seems like I was right regarding USDT not having a survival chance inside the US, because USDT has decided to rebrand themselves as USAT for the US market space, because in their eyes, that's a better call. I'm sorry, but if you have nothing to hide, honestly, if you have nothing to hide, why the rebranding? You only rebrand a business or a token if you have a dodgy past, where you want to get away from that bad name and just, a fresh start. So maybe Ripple was right, essentially suggesting, that Tether is being investigated, there's some dodgy behavior going on in Tether and so on, which was said a while back ago. But Tether, the company behind the world's largest stablecoin, USDT, today unveiled the new US regulated stablecoin called USAT, designed specially for American markets, because USDT wouldn't pass through. It's the only reason they would create USAT. Ironic on the name. The announcements made during an event in New York City also revealed the appointee of Bo Hennings as the future CEO of Tether's new American division. There's a reason why they chose Bo Hennings, because they know that essentially he can push it through the United States market space. If they had a different CEO, they wouldn't have a hope in hell. But because they're using Bo Hennings, they can essentially push the USAT through. And ironically, they named it USAT to make it look American. It's an American project, American stablecoin, American dollars, and in reality, it's based in El Salvador. The move comes as a period of significant, essentially, growth for the stablecoin sector, which has seen its total market capitalization expand from $208 billion to $287 billion this year. This expansion has been supported by new regulatory clarity, including the passage of the Genius Act in mid-July. The law signed by President essentially Donald Trump establishes the federal frameworks for stablecoin issuers. I knew for a fact, I said this day one, that USDT is not going to survive once we pass that Genius Act. And you fast forward to today when they're introducing USAT. USAT is designed to be fully compliant with the new Genius Act, because USDT could never be. Tether has partnered with federally essentially regulated crypto bank Anchorage Digital, which will serve as the token issuer. Cantor Fitzgerald will manage the reserves, ensuring essentially the stablecoin is backed 1-to-1 essentially ratio by the US dollars with disclosed reserves, a critical component of the new regulatory standards. For over a decade, Tether, as the creator of the stablecoin industry, has issued USDT, the backbone of the digital economy. And today, the US dollar stablecoin essentially for hundreds of millions of undeserved people living in emerging markets, proving that the digital asset can deliver trust, resilience, and freedom on global scales. My only question to Tether would be essentially, if this particular token, essentially, USAT, can deliver to the American citizens transparency, a safer, resilience, freedom, global scale token, why couldn't USDT? What's wrong with USDT? So is Tether suggesting the rest of the world using USDT is unsafe, and that USAT is actually the safer token? Today, with the introduction of USAT and Bo Hennings appointing as the future CEO of Tether USAT, we are taking the next natural step, bringing the same strength to US under the world-leading US regulatory framework, said Paulo, the CEO of Tether. According to him, the motivation behind the new stablecoin is to bring the benefits of the digital dollars to the US, the world's most prominent financial market. While Tether's existing USDT stablecoin has a market cap of $169 billion and is widely used in emerging markets, USAT is being framed as a product tailored for US businesses and institutions. Bo Hennings, essentially CEO designated of Tether USAT, a lawyer and a former director essentially of the White House Crypto Council. Now we know why Bo Hennings left, because Bo Hennings received a very, very juicy check from Tether to become their new CEO, because Bo Hennings became a part of Trump's White House Crypto Council and then all of a sudden decided to leave. But now we know why he left, because he's just become the CEO of USAT, which means he received a very nice check for that position. I am honored to lead the USAT as we prepare for its launch, creating a US regulated dollar-backed stablecoin designed to strengthen America's role in the global economy, he added. So Tether's business, initiative move is to name it USAT, so it makes it appealing to US businesses and US citizens, and also get Bo Hennings as the CEO because he was a part of Trump's team for crypto White House advisors. Good move from Tether, I'll be very honest, smart move, but are people going to be, eating that up? Because if people realize, why USDT wasn't accepted or why you had to rebrand yourself, he added, by building USAT with compliance, transparency, and innovation at its core, which tells me that essentially USDT had no compliance, no transparency, or innovation in any part of its core, because USAT has all of those qualities. Apparently USDT didn't, because it didn't make the cut. We are ensuring the dollar remains the foundation of the trust in the digital asset space. Well, this one will, because the other one had no hope in hell. So there you go. If you want to feel American, go for USAT, because apparently that's how you sell the dream, by naming it after a country so it looks promising. I mean, great marketing. I'll be very honest. I think Jaguar should hire Tether's marketing team, because naming the token USAT, getting Bo Hennings, giving him a big check, Jaguar, should have used Tether's marketing team. Now, Galaxy Digital is what we're going to talk about next. Galaxy Digital makes $326 essentially millions Solana acquisition for Multicoin. Before we talk about essentially Galaxy Digital, let's go inside the comment section first. Let's see what's happening there, and then we'll go through the next news on tonight's live regarding Galaxy Digital. See where we're at. Hollow Miles CMF. Peg, good to see how you're doing. Like, retweet, and comment outside the live, please, and thank you. Let's go, Peg. Facts. CMF members, thank you so much to everybody who has already liked and retweeted this live on X and put a comment outside the live. If you haven't done that, CMF members, drop a comment, drop a like outside the live, and retweet if you haven't. If you have, honestly, thank you so much. Let's blow Miles up. Let's go, Peg. Do you think ETF as soon as next week? Maybe is what I would say. Do I think ETFs will be happening as soon as next week? Maybe. This month, a few things are going to be happening, and ETF is on the agenda this month and moving forward. Happy Pisces, good to see you. How you doing? How you been? I mean, there is one particular ETF which we're going to discuss towards the end of the live. Do you, when you rebrand any business, you have done something majorly wrong that's coming from a business background? Facts. Hi, Miles. Richard, good to see you. How you doing? I laughed when I saw that. Clearly, they can't operate in the US as is due to their dodgy dealings. Facts. USAT, dang. Facts. Now, Galaxy Digital is essentially, expanding into Solana. So Galaxy Digital made a significant $326 million acquisition in Solana for Multicoin Capital's digital asset trust, executed through notable essentially market maneuvers involving Binance. This acquisition underscores increased institutional interest in Solana, pushing short-term essentially price momentum and signaling strict treasury shifts among key players essentially. Galaxy Digital acquired that amount for particularly their Multicoin Capital's digital asset trust. The transaction reflects a broader strategy involving forward industries and OTC essentially activities, signifying essentially one of the largest institutional moves in recent months. Led by CEO essentially Michael Novosgod, Galaxy Digital's acquisition indicates a strong institutional focus on Solana as they collaborate with Multicoin and forward industries. This move aligns with their previous endorsements of Solana as a scalable layer 1 platform. Galaxy Digital is very big on the idea of Solana, not so big on the idea of Ethereum. They see Solana as the better option to Ethereum. The transaction impacts the Solana market significantly, contributing to rising open interest in futures and increasing liquidity with the ecosystem. Short-term price momentum is evident as stability returns post-OTC settlements. over the counter essentially. Financial implications include Galaxy Digital's notable cash reserves facilitating this acquisition. Solana's capital flows may encourage a reshaping of the market strategies reflecting growing institutional demand, and such strategies and strategic acquisitions suggest precedented of volatility followed by stabilized market conditions. Insights essentially point to potential increased staking activities in Solana with possible essentially crossover effects on other digital assets. Potential impacts could be seen essentially on Solana's experience ecosystem expansion driven by institutional engagements, reflecting historical trends seen in layer one essentially token investments, and blockchain analytics tracks such movements for insights into broader essentially market trends. And Galaxy Digital just completed one of the largest sole OTC acquisitions to date by doing this particular maneuver of $326 million in Solana. Galaxy Digital is honestly, they're very big on the idea of Solana is better than Ethereum, and that's why they're very heavily invested in trying to expand that market space for Solana, because they see it as a better market space than Ethereum essentially is. Now, VanEck is what we're going to talk about next on tonight's live. VanEck is about to be filing for the first ever US spot staking ETF. This initiative signifies a breakthrough in crypto product offerings, enhancing market participation and liquidity for digital assets while meeting increasing institutional demand for innovative financial products. Day by day, honestly, we're getting news from more institutions getting somehow more involved in terms of filing for new things inside the crypto space with the SEC or CFTC. The appetite for the crypto space is growing day by day in terms of the institutional sector. VanEck is set to file for the first ever US spot staking ETF based on Hyperliquid's HYPE token essentially. This move aims to pioneer regulated crypto products, offering both retail and institutional investors new avenues for participation in digital assets. Key figures such as Jan van Eyck essentially and Kyle are steering these efforts. The proposed ETF will essentially facilitate investor access to HYPE through major exchanges, incorporating unique features like staking yields and token buybacks. The ETF is expected to influence market dynamics significantly. VanEck targets a product scale of $500 million, signaling robust institutional demand. Community discussions reflect optimism about increased liquidity and similar crypto offerings and expansions. Financial experts anticipate that regulated essentially spot exposures may drive liquidity events and enhance token essentially valuations. Combining staking rewards with ETF structures represents a novel approach, expected to enhance investor engagements and generate new liquidity pathways. Matt, the senior essentially digital asset analyst from VanEck, stated, Hyperliquid has become the firm's essentially broader strategy for liquid digital asset funds. The realized growth and essentially rising trading volume supported for the selection for the staking focus of ETF filings. Unlike previous filings, this is the first ever US spot ETF integrating staking rewards. First ever. Historically, VanEck's ETF launches in Bitcoin and Ethereum spot market participation, comparable to essentially initiatives, have emerged in Europe, yet the US market remains very unique. Citing experts' views essentially on potential outcomes such as liquidity shifts and increased trading volumes, comparisons are drawn from with prior crypto essentially ETF launches, predicting similar trends. The hyper essentially liquid initiative is underscored as a pivotal moment for regulated digital markets. Hyperliquid is actually becoming quite a good choice essentially for a few institutions, to be fairly honest. There was one particular institution, which off the top of my head I forgot the name of them, but they decided to drop a certain amount of Solana they had and a certain amount of other token that they had, and decided to just go all in on Hyperliquid. Now, Wisdom Tree is what we're going to be talking about next on tonight's live. Wisdom Tree is about to be introducing tokenized private credit funds as market crosses $16 billion. As I said on yesterday's live, essentially, the crypto space is still quite early in terms of the institutional space because we're at the stage of institutions, banks, and regulations still. Moving forward, more regulations, more banks, more institutions, more IPOs, more ETFs, more ETPs. We all know the picture now. On that topic, I was explaining to everybody that you might want to hold back if you're thinking about doing any sort of financial maneuvers inside the crypto space, and just see what the bigger firm is going to be offering you as you go forward. Because these firms are much more safer, much more essentially, they have, as I explained yesterday, lawyers head to toe. Asset manager WisdomTree launched its private credit and alternative income digital fund, CRDT, a tokenized private credit, essentially a vehicle aimed at uptick in firms expanding into tokenized private essentially credit niches and other essentially real world assets. The fund will include credit extended to private corporations, loans essentially made to real estate trusts, which are funds that track baskets of commercial properties, and debt from business developments and corporations, which are investment companies that offer financing to other businesses, according to today's announcements. CRDT is available to retail and institutional investors, expanding access to an asset class typically reserved for institutions, expanding to an asset class typically reserved for institutions, but now opening doors to retail. As I've been saying, if you wait just a little bit longer, you're going to be seeing a lot of institutions, a lot of high-profile institutions offering you certain services inside the crypto space. And sophisticated investors. Tokenization is the process of converting ownership or rights on essentially to an asset, physical or digital, into a digital token on a blockchain. Tokenized essentially private credit instruments now account for over $16.7 billion in value, and the market has steadily grown since 2021, according to realworldassets.xyz. Tokenized funds, all types, include U.S. Treasury funds, essentially money market funds, which invest in yield-bearing debt, private equity funds, and other alternative investment vehicles, continue to grow in the market cap and popularity as the legacy financial system moves on chain. Investment bank Goldman Sachs and essentially Institution Bank of New York, BNY Mellon, offered essentially access to tokenized money market funds for institutional investors back in July. But now this service is being essentially offered to the retail section. State Street, one of the three biggest asset managers, which includes BlackRock and Vanguard, signed on essentially as the first custodians for financial service company JP Morgan's tokenized platform back in August. State Street completed the platform's first ever transaction by purchasing $100 million in tokenized essential commercial debt from the Overseas Chinese Banking Corporation, OCBC, one of the Southeast Asia's oldest banking institutions. Or Coral provider essentially, regarding essentially what's been happening with their Chainlink, UBS, and asset managers with $5.9 trillion in assets under management of real-world assets, which we discussed yesterday. BlackRock, the world's largest asset manager with over $12.5 trillion in assets under the management, is reportedly exploring tokenized ETFs as well, which we discussed at the beginning of the live. And tokenizing ETFs could increase capital velocity and allow the tokenized investment vehicles to be used as collateral in DeFi applications. If you're thinking about doing something inside the crypto space with your cryptocurrencies, going further into this essentially digital world that we're heading towards, and you're seeing the options that are available right now of what you can do with your cryptocurrencies in terms of borrowing, essentially storing them somewhere or whatever, I would essentially suggest that wait for those options to expand, because State Street offering types of services for the crypto space, WisdomTree now opening their doors to the retail sections of the crypto space. Typically things that are only reserved for high profile investors or institutions are now being offered to the retail section of the crypto space. If you wait a little bit longer, you're going to have so many institutions throwing different offers at you where you don't even know which one to choose because they all seem so appealing. Obviously, always read the little writing at the bottom, but you get the bigger picture, essentially. Don't just go for something that's available now. You're going to have a lot of options moving forward. Now, moving on from that to another ETF news, but this one's related to XRP only. Before we talk about that, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or statements, put it down inside the comment section. More than happy to help you out. So, does this mean that Bitcoin will not have a crash because the strength of USAT versus USDT? Yes and no. USDT could still go down somewhere down the road. USAT is what seems like they're going to be shifting towards over time. So they might be saving their own ass. This fake news about USAT will give Michael Saylor a new podium to pitch Bitcoin even more. Now, can XRP break the $4 mark, or $5 mark, or $6 mark, or $10 mark as the essentially Rex Osprey Spot XRP ETF goes live? So here's the thing. There is a particular news going around right now on X and other social media websites suggesting that we could be having an XRP ETF today, pretty much, which hasn't happened. We haven't got an XRP ETF today in any sort of a way, and they're suggesting it could be tomorrow as well. What's actually going to be happening is, so there's a deadline that's running out for a particular XRP ETF, which a deadline that's been pushed multiple times. Now, the deadline is technically going to be running out on the 18th of this month, is what's been suggested. Not today or tomorrow. By the looks of it, it's going to be on the 18th. But what is going around that it's going to be today or tomorrow, XRP ETF. So here it is. XRP price today is back in the spotlight as highly anticipated Rex Osprey essentially Spot XRP ETF officially launched. Essentially, is supposed to be launching essentially today, marking a historic milestone for Ripple XRP and the broader crypto market space. Now, this ETF allows investors to gain direct exposure to XRP through traditional brokerage accounts, lowering the barrier to entry for both retail and institutional players. There's also one more thing I need to know. It's not technically a full-on spot XRP ETF. It's more like 70 to 80% XRP spot ETF. That's about it. Now, it also essentially follows the same framework of the Investment Company Act of 1940, differentiating it from other pending applications filed under the Act of 33. So it's quite different from the rest of the filings. Unlike some essentially competing funds still awaiting approval, the Rex Osprey essentially ETF is structured through a wholly owned Cayman Islands company, and it carries a 0.5% expense ratio, higher than typical ETFs, but similar to Rex Osprey Solano essentially plus staking ETF, which already manages more than $240 million in assets. This development essentially has sparked renowned optimism among traders, with technical indicators essentially signaling the potential for a major bullish breakout towards the $4 level or $5 level and so on. The Rex Osprey essentially Spot XRP ETF officially went live, essentially they're suggesting essentially today, after receiving approvals from the US Exchange Commission, SEC. Now, the regulator completed its 70-day filing review, is what they're essentially saying, period, without objections, which is true. The SEC hasn't mentioned anything about a rejection of this or a pause, given the green light to the first ever spot XRP ETF in the United States. Now, market watchers believe the launch could act as a catalyst for XRP price gains. The ETF places Ripple XRP alongside Bitcoin and Ethereum, regulated essentially ETF markets, where demand has historically driven essentially inflows worth billions of dollars. Data from SoSo Value shows that spot Bitcoin and Ethereum ETFs currently hold between 5% to 7% of their respective market capitalizations. If XRP achieves similar adoption, analysts project that spot XRP ETFs could attract over $9 billion in assets within the first year. Polymarket data further reveals that the odds of an additional spot XRP ETF approval this year have climbed to 92% right now, with major issuers like Franklin Templeton, Bitwise, and Invensico waiting in line. More approvals could be added in essentially momentum and potentially drive the price of XRP closer to its next resistance targets. From a technical standpoint, XRP's current price has been consolidating near $3 after essentially staging a strong recovery from $2.70 support zones. The daily chart highlights a double pattern formation with a neckline essentially at $3.38, suggesting a potential continuation of this uptrend happening. More importantly, XRP has broken out of its falling wedge pattern, often essentially a bullish signal, while holding above the 100-day essentially exponential moving average. Momentum indicators are also favoring the bulls, with the relative essentially strength index trending above the neutral essentially 50 level, and essentially percentage price lines across to the upside. If buyers maintain control, XRP's price prediction today points towards a move past $3.38, opening the door to $4 and potentially overshooting to $4.30 area in the coming weeks. However, failure to hold $3 could trigger a short-term pullback to $2.85 and $2.90, which is not drastic in any sort of way. The combination of a historic ETF launch, rising essentially institutional interest, and technical bullish setups makes essentially the coming weeks pivotal for Ripple XRP. The coming weeks pivotal for Ripple XRP. With momentum building, the focus now turns to whether XRP can break $4 and retest levels last seen near its all-time high price zones, as well as traders should watch for volatility around major resistance points, as ETF-driven rallies often seem profit-taking before establishing a new trend. Still, sentiment in the market appears optimistic, while analysts eyeing XRP price targets well beyond $4 if essentially broader ETF approvals continue to be in October. Now, we do have a tremendous amount of ETFs essentially happening this year in terms of their filings. You know, the SEC has to be looking out to improve it. XRP ETFs, some of them are around October as well, if I'm not mistaken. Some of them are actually coming up to their deadlines right now. But this one, this particular essentially XRP is spot ETF, is not a full-on spot ETF in any sort of way. And it was filed differently. It's not filed under the Act 33. It was filed differently. It's the same essentially Solana semi XRP, Solana semi spot ETF they already have going on with $230 million inside of it. That was essentially approved a while ago. What we actually need, if we want to be inside the ETF market space, is a full-on spot ETF. This one was filed very differently. And apparently the actual launch date is going to be around the 18th, essentially. The full-on actual launch is going to be around the 18th, is what's being suggested right now. Some people are suggesting it's going to be today or tomorrow or so on. Full-on date is, full-on movement, full-on action and so on. It's going to be around the 18th. But, however, putting that to one side, 94% approval rating still on the board for XRP ETFs. First XRP ETFs to be essentially, for the first ETFs to be approved on the legitimate scale. Two, $9 billion is still on the table to be entering into XRP spot ETFs. And three, Eric and James are still behind that XRP ETFs are going to be happening this year. And with the particular news I shared in the middle of the live with the DTCC listing, essentially of XRP ETFs from Canary, it shows that the next steps are taken for an XRP spot ETF to be happening. The SEC will never reject these XRP essentially ETFs, in my point of view. They'll never reject an XRP ETF or a Solana ETF, an Ethereum essentially amendment ETF, and so on, because there's no point of rejecting. If they approved a Dogecoin ETF for an absolute laugh, with Eric and James suggesting that, not suggesting, actually stating the facts that the SEC approved an ETF with no essentially basis, no utility, nothing behind it, there's no reason why they will actually reject legitimate essentially ETFs going forward. XRP ETF still this year is on the board, 94% of approval. Eric and James are saying it's going to be happening. That adds a little bit more approval to that rating. $9 billion is still on the table, and this one is particularly on 18th. Why am I saying these things? Because all good things must come to an end, which it has now. This is the endings of tonight's live. If you have any questions, go for it right now inside the comment section. If you don't, I'm going to be doing the outro and essentially giving everybody that joined late of what we talked about. On tonight's live, we talked about the XRP Osprey essentially spot ETF that's been going around on X. I explained to everyone right now what it's actually about. We also went through news regarding essentially, there's one particular news that actually I didn't go through, which was regarding Russia. Let me just give you this one quickly as well. So Russia cut rates right now. Russian central banks have cut rates and sanctions via crypto. So Russia simultaneously essentially cut their rates and uses crypto and banking essentially channels to sidestep Western sanctions, with key governments and financial institutions innovating digital and blockchain settlement systems. This maneuver allows Russia to sustain economic activities despite sanctions, highlighting these challenges of enforcing economic essential restrictions amidst increasingly sophisticated digital finance strategies. Russia's banks have done rate cuts, and they're actually somehow green-lighted the idea of moving towards cryptocurrencies for payments. Russia is maneuvering these through economic constraints by lowering interest rates and exploring crypto solutions. The Bank of Russia essentially is instrumental in this strength of promoting digital route to mitigate the effects of escalating Western sanctions. And the UK government has intensified measures targeting crypto exchanges that facilitate Russian transactions, such as Grinex and Mir. This action underscores a broader effort to weaken economic invasions, essentially in digital currencies. Economic sanctions are also influencing Russia's shift towards crypto, affecting global connectivity, and the digital route allows Russia to engage in cross-border transactions, bypassing traditional financial systems. This strategic move essentially could alter the dynamics within crypto markets, creating new challenges for transactions Politically, essentially, it challenges the effectiveness of sanctions designed to curb Russian geopolitical ambitions, and the integration of crypto networks into Russia's financial system reflects an adaptation strategy. This approach may prompt other sanctions nations to pursue similar paths. So, this is what was said from the Kremlin, just to give you a heads up. If the Kremlin thinks they can hide their essentially, this is what was said from the British government to the Kremlin. If the Kremlin thinks they can hide their desperate, essentially, attempts to soften the blow of our sanctions by laundering transactions through dodgy crypto networks, they are sorely mistaken. These sanctions keep up the essentially pressure on Putin at the critical time and crack down on illicit networks being used to funnel money into this essentially war chest, said Stephen, the sanctions minister of the UK government. So, Russia is actually moving towards digital currencies. They've actually done their own rate cuts right now, and they're moving away completely from Western payment essentially services. And they're moving heavily into their digital route right now. Before we go, let's go inside the comment section first one more time, and then we'll call it tonight. Let's see where we're at. Thank you, Miles. No problem, Stormy. See you tomorrow, see you on Monday, same timing as usual. Miles, has your portfolio changed in any way, or are you still holding the same tokens? Still holding the same tokens, to be fairly honest. Good night, Miles. Thank you for a great informative episode. God bless you. Night. Let's go, Joes. See you on Monday, same timing as usual. Good night, Miles and all CMF. Thank you for a great live and news. Let's go, JP. See you on Monday, same time as usual, brother. Thank you very much, Miles and CMF family. Have a great weekend and see you on Monday. See you on Monday, Carlos, same time as usual. Miles, I've just purchased £3,000 worth of XRP at $3.12. Just expanded my bag. Let's go, funky brother, on that. Night, Miles and CMF. Pablo, see you on Monday, same time as usual. Gonna be bread and soup for a few months. Funky brother, don't worry about it. Your future is what matters. Good night, brother Miles, a CMF family. Funky brother, let's go. See you on Monday, same timing as usual. Good night, brother Miles, a CMF. Funky brother, see you on Monday. Mike, see you on Monday, same time as usual as well, brother. Take care, Miles, a CMF. Ray, see you on Monday, same time as usual as well. Good night and have a good weekend. Let's go, Cali. See you on Monday, same timing as usual. Okay. If you tuned into this live for the first time ever, this is the CMF Live. It stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news on cryptocurrencies, CBDCs, AI, politics, and regulations. Vital information for you to know about regarding the world complete transforming to digital space. This was episode 372 of the CMF Live. We always do Q&As on our live, so always tune in Monday, Friday, 10 p.m. London time onwards. And the disclaimer of this live, as always, has been not financial advice, not political advice, and whatever I say is only for entertainment purposes. I'll see everybody on Monday, same timing as usual. Everybody have a great weekend. I hope all of you have an amazing weekend, and I'll be seeing you on Monday. Night all, Susie, let's go. See you on Monday, same time as usual. Thanks, Miles. Enjoy your weekend, night and day, CMF. Let's go, Shelly. See you on Monday as well. Mike, see you on Monday, brother, same time as usual. I'll see everybody on Monday, same timing as usual, 10 p.m. London time onwards. CMF, I hope all of you have a great weekend. Love you all. See you on Monday. Like, follow, retweet, subscribe if you already haven't. If you have, thank you so much.